Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing today? Having a good day? This is just a quick, it's a stock market update show that we do. Just real quick to go over the good, the bad, and the ugly for the day's moves in the markets. We are financial advisors here at Jazz Wealth. I hope you'll keep us in mind. I wear the shirt every day to sort of sneakily put the logo there, so maybe you think about going to the website. If you have retirement accounts or long-term investment accounts, we're actually investment managers. We put all of our portfolios right on the website there, so you can see not only what the goal of each portfolio is, but of course performance along the way. And we're going to cover that tonight for our customers. See, every week we do a class for our customers just to teach something new, more detailed than what we can really put out here publicly. And tonight's focus is on the portfolios. How are they doing? Adjustments, things we want to make. We're going to do something a little different and try to show even more clarity into how these things work. So we'll cover that. We're also going to focus on one specific thing. We did the class last week, specifically what we're watching as the number one, the most accurate recession indicator that there is, that all the fund managers look at. Well, we taught that last week to our customers, and so we're going to give you an update on that one as well. And that's pretty much it. We're playing a game. It's called Guess the Dow. If you want to go to that website there, on the bottom right-hand corner of your screen, you can take a shot. Where do you think the Dow closes? You got to be the closest without going over. The Price is Right style. And if you're the closest without going over, whether you're a client or not, anybody can play. And we'll send you a $100 gift card. We've been doing that now for a couple months, actually. And so far, so good. I think we'll keep that up. You guys seem to be enjoying it. And so thanks for playing. It's not a marketing scheme of any kind. It's just, hey, take a guess, and if you win, we'll reach out to you. If you don't, we won't ever bug you again. All right, let's talk about the stock markets here. It's an exciting one. Since 8 o'clock last night, I've been just like, so excited to watch this. 372 on the Dow, 38 on the S&P, 139 on the NASDAQ. Very positive day, but more importantly, yesterday's video. If you're watching this for the first time, go watch yesterday's closing beat, how we just perfectly set that up for what's happening today. It's so funny, man. It just, the whole concept, it just blows me away. Yesterday, we talked about all of the sectors positioning themselves to really make a move here, and I even said the exact words were, wouldn't it be interesting if the catalyst to break us out over those highs that we've been talking about happened overnight? And at 8 o'clock, futures took off. We broke above the highs there. China discussing, or they're going to get together and talk. This one felt a little bit different, the way China sort of reported it overnight, talking about how they expect a favorable outcome. They're really ready to come to the table. U.S. has agreed. They've talked already, and they're going to get negotiations started again in October. That's a little bit later than what was expected, but that was enough for people to say, okay, I'm excited by that. Let's go up over the highs here. So if you look at the stock market today, here's the E-mini S&P futures breaking above highs that we haven't been able to get through in over a freaking month, man. Just all sideways in here. So finally putting a little closure to whether if you're short and you needed to cover today, that puts closure to that. If you've been looking for a reason to get long, it gives you that reason as well if you like the markets at these levels. And so just a lot of positive news on that respect, and it gave us the catalyst that we need. So it really showed that Washington's clearly watching the markets. They know exactly when they need to release this data, or China does, and they keep dangling that trade deal right in front of you guys so that you feel like you can't miss out on a market. See, if there was no trade deal going on, we'd all be looking, going, uh-oh, recession coming. Everybody seems to think recession's coming. Even if it doesn't come, everybody thinks it's coming. So therefore, the markets just bleed off a little bit. But nobody wants to be out of this market for the possibility that a trade deal is announced and it's a major good deal, everybody's excited, and the markets take off for the rest of the year or something like that. And so because of that, you have everybody needing to stay in the market. We'll cover it as we go here. You also had payroll reports come out. That comes out from ADP, much better than expected. You had the services number that we went through and spent a little time on manufacturing yesterday. Services number came in much better than expected. We talked about why that could be the case. Manufacturing not so heavy, services clearly being the leader there. So good number out of that. Add that to the China news, you got a recipe for a rally. Now, next resistance area, 3,000. Technical traders will look at that. So on the S&P 500, you got 3,000 as the next sort of overhead resistance area. And that's probably why you saw it slow down just a little bit today as it started screaming higher. People going, all right, I don't know about that level. Let's just not buy all day long. And so you got really pretty nice there in the overall markets there. Just so cool. I love to tell you guys ahead of time of something rather than come in and say, I told you this thing was going to do it, but never have said that. So really, really good class yesterday. I was really excited to see us break above. We talked about not just bleeding above, right? Exact words, not bleeding above this high, but that there needing to be a catalyst and that people would get excited and push through that and just like perfectly played out. Well, let's go through some of the stocks we've been talking about here. I should also say we're not active investors here at Jazz Wealth. I'm not promoting the idea of you buying and selling. I realize there's a lot of you that do that. We're long-term investors, and so we really just keep up with the markets on a daily basis for that feel, right? To know what's going on, to know how all of our positions are doing. And I don't mean for it to be like, actively trading. Anyways, Western Digital, the breakout we talked about the other day, continuing today. That one looks pretty good there. You got PVH. This is Calvin Klein and the others and things like that. 4% on the day, continuing its rally. The CEO bought $10 million worth of shares yesterday. So that looking good. Tapestry and a lot of other retailers doing well. Tapestry had an 8% day. Did a video on that one just to give you an idea of what they were working on, how they missed earnings and how they were going to turn things around. Yesterday announcing the new CEO, a tech guy from Goldman Sachs, just amazing. This company promised they would do something. They are doing it, and investors are rewarding them by buying the shares off that big drop there. So far, so good. Capri, right? This is Michael Kors, and I believe it's Michael Kors and Coach. Michael Kors, yeah, and Coach too. So Capri was a little higher today, 7% on the day. A lot of retailers were higher. The China news really helping there. Nordstrom a little bit higher on the day. You could look at XRT, which is the sector in general, just having a great day. This is more of an index sort of sector index ETF, I guess you'd call it, or equal weighted ETF. So 3.75% back to the 50-day moving average there for retails. All look good there. Also in the S&P, you got semiconductors. So semiconductors had a good day today. You can kind of understand why, really. All the trade news seeming to be positive, even if there's just no deal. You didn't have Trump coming out and saying, oh, no, we're not going to get back together. We're not negotiating. All was good, right? So people looking at that going, well, that's got to help the semiconductors. And there were a lot of analysts yesterday. We covered one in particular who came to the semiconductors and sort of anticipated this very well, actually. We went over their stats and everything, and I got a few more here for you to go on as well. We don't have to do this sort of thing. It's sort of extra work for me, but if you like following along with these sort of things, we can do that with the analyst stats and all that. So Micron, higher on the day, basically hitting the profit target that the analysts from yesterday had in mind. So what are you going to do now? Are you going to raise the profit target, or we'll see what he has to say. And then all of them in the mix there. If you look through, Intel had a strong day, 2% on the day. Lam Research, LRCX is the ticker symbol. AMAT, AMAT is the symbol. All strong days overall. They've had a good run up here recently, so if they do pull back a little bit, I don't think anybody would mind. Xilinx being another one. We can look at the Dow. So the Dow, same thing. Let's use the Dow futures so you can see exactly how that's going. Yep, so a little breakout over this sloppier high there. Back above the 50-day moving average, something it hasn't been able to do in a couple months now. So bullish sign for the technical traders, or at least a start of a bullish sign. So we'll see what happens there. And then inside the Dow, you're going to have Intel, of course, one of your bigger leaders. Just a great day with the China news there. Caterpillar's always one you look at on the trade news, 3.25%. We happen to, there we go, see that one pop. A little bit higher on the day. On the downside, it's all defensive names, right? So whether we look at the Dow or we look at anywhere else, anyone who was playing defense by going into some of the consumer staples or some of the utilities and REITs and things, they started plucking money out of that today. Doesn't mean that these are bad areas. It means, hey, Coca-Cola did really well. It's been a great sort of defensive play, and people have a profit. So now that they have a profit and they feel a little bit more bullish generally about the market, what do? They take money, a little bit of profit from the defensive plays that worked well for them, take that profit and allocate it towards the rest of the market. It's sort of like taking risk without risking anything because they have the profit to do that. So Coca-Cola, Procter & Gamble, some of the lower ones on the Dow here today. If you go over to the NASDAQ, I will do the NASDAQ futures as well. There you go. So breaking above those highs, tech in general having a pretty good day. Semiconductors, things like that. But broad-based, you had a nice little rally in the NASDAQ. NVIDIA popping above the recent highs there, about 6.5% gains. A really good day overall for that one. Same names, AMAT, Lam Research, Xilinx, things like that did really well. Comcast sticks out as a note here, breaking a new highs, up 2%. Was upgraded at Oppenheimer. What was that guy's name? Did I call his name there? No, Oppenheimer, $54 price target. The average price target for all the analysts there is 52.6. This guy's got a 77% success rate, 16% average return. He's not the best, by the way, so I looked up the best again. The best analyst called $52 as the price target, but he called it 3 months ago. We're not to $52 yet. I mean, you get what's happening there. But he called it 2 months ago. 3 months ago, I'm sorry. And that analyst, what was his name? Mike McCormick at Guggenheim. So Mike McCormick, 82% accuracy rating with a 16% average gain. He's got more under his belt too. He's had more calls there. So a lot of people just focusing on that 52 area in terms of the analysts that actually cover the stock. Take of it what you will. I'm just giving you the stats here, not making really any recommendations. But so far, Comcast looking pretty good there. And they have a lot to say about this stock. So if you read some of the analyst reports, holy cow, they have a lot. There's a lot going on with the company. So they got a lot to say there. Let's go back to the charts. All right, let's take a look. Match.com, and actually IAC Interactive there, also lower on the day. We'll focus on Match.com. A little bit lower because Facebook's launching their own dating service through Instagram, I believe. So you'll be able to sort of link your Instagram profile. You'll be able to share stories and stuff through there. I wouldn't know. I'm staying away from it, right? Don't catch me on that thing. But anyways, Match.com and IAC lower on the day, largely because of that. Actually, all because of that. But otherwise, pretty good performing stocks there. If we go through the individual sectors, all these sectors that were a mess and moving towards the higher end of the range, they had their opportunity today. They all broke out. Any sector that did not, you recognize that as weak right away. You got to be able to pick up on that. But financials, real sloppy. Yesterday we talked about them moving and positioning themselves for the breakout. Today actually getting able to do that. Most of the financials were actually pretty good today in general. So that's the XLF. IYT, that's your transports if you want to follow, coming off its 10% correction, highlighted here by this pullback. One of the only sectors that pulled back 10%, held, and started to rally from there. So all looking better there, back above the 200-day moving average, 50-day moving average. All technical traders are happy with that. Not too bad there. I'll go briefly through the other ones. We don't have to spend a lot of time on it. Just all of these you're going to notice from yesterday, positioning, today, breakout. You got industrials, XLI you can use if you want, communication services, breaking out above that little range that's been giving them some grief there recently. So not too bad there. And consumer discretionary, right? So we move from consumer staples into consumer discretionary. People willing to take a little bit more risk. But again, if you look at consumer staples, it's had a really good run. So although it was down today, you can really clearly see that that's people taking profits, not taking excess cash or reserves or taking their own capital. They're taking profit out of these areas and putting them into more risk-based areas or more cyclical areas for that case. So bottom line is all of those things we talked about yesterday moving towards the high of the range, looking great today. I mean, it's just perfect. Everything looking good. Bonds pulled back today. You guys know that that's already the case because 30% of the time it's positive through this month. Actually, it ends on the 24th if we were following through there. So bonds are largely expected to pull back. Only 30% of the time over the last 10 years have they pulled back. So 3 out of 10 times since we're only talking about 10 years there. So that pullback that we've been giving you the stats on, just starting to materialize a little bit. I don't think it's over in terms of it trying to go test those highs again. I think we'll see a little excitement there still. But in general, that pullback sort of playing out, and that's across the board. If I look at some of the other sectors, your gold miners, they pulled back. That's been a real strong sector. Silver, and incredibly volatile right now, but very extended in the short term. That one pulled back today. Gold in general, GLD you can look at, or just look at direct if you want, the gold futures. Either way, about 2% to the downside. Utilities, defensive area that's been a little overheated lately. You can see the profit coming out of that, moving into other areas of the market. And REITs moving there, a little bit of a pullback as well. Lesson there on the silver is a crowded trade, right? That's what they call a crowded trade. People piling into a trade, all of a sudden circumstances change and everybody heads for the exits, not because they're losing, it was a great trade, but everybody heads for the exits and all of a sudden you get a bigger move to the downside than expected. You got to be careful with some of these when you're playing around with that sort of thing. What are we going to do? 56% of the S&P now above the 50-day moving average. That number probably ticked a little bit higher. It caught that about maybe 20 minutes before the end of the day. So we'll just say 56% above the 50-day moving average. We've seen that number building. We've been using that as sort of a reference point. We've also been talking about the 52-week highs, and I mention them every day, and it's like, why does he talk about these 52-week highs? Because it's how the stocks inside of them, or which stocks inside of there hit the 52-week highs. Remember 2 days ago, we said there were 40 new 52-week highs, but 3/4 of them were REITs and utilities. So we were talking about the idea of you got to have everybody else. You can't have REITs and utilities push this market to highs. It's just statistically impossible. actually it's impossible. So then yesterday, right, more 52-week highs, but only half of them were REITs and utilities. So we had other sectors start to come in. We talked about the positioning and everything. Well, today you have 62 new 52-week highs, 7 sectors represented in the mix there. So really, really cool to see that sort of expansion over the last few days. If you like following this sort of stuff, if not, you've left already, and yeah, thanks for watching. But so that's what you have there. Now, there were only 2 REITs today that were in the new 52-week highs. So 60 stocks came from other areas of the market. That's what you like to see. That's a broad-based rally. That's everything there. There were no utilities, by the way, in the mix there. So very, very cool if you get a chance to watch that. Otherwise, I just point it out every day to you. 0 new lows, right? So no 52-week lows today. And so, of course, that's very cool. The stats that we talked about yesterday on Campbell's Soup, it was supposed to take 5 days. It actually only took 1 day to pull back, down 1.5% within 5 days. There was a 76% chance of that happening. Actually, it just happened today, right? So you don't have to wait 5 days. The stats play themselves out again. You can tell I'm big on stats. I like the numbers. I don't mess around. Couple other things, and I'll take your questions if I can answer them. Pepsi paying out the dividend there, 95 cents. Ingersoll Rand, there we go. Is it loading? Everything's loading, right? Looks good. Paying out 53 cents. General Motors paying out 38 cents. BHP Billiton, and then its counterparty as well, paying out $1.56, and Bank of America paying out 18 cents. We happen to own all of those here in our portfolios at Jazz Wealth. Lyft. Oops, no. LYFT. There you go. Lyft back down towards lows here today. There was an analyst that came out today and said the worst is over, from Deutsche Bank, actually. He said the worst is over. He's got a $70 price target on this thing. That's kind of crazy, but $70, he says, in the next 12 months that thing's going to move to. He's 58% accurate with a 10% average return. I looked up the best analyst. It's actually a guy his name is Yusuf. From SunTrust. He's the most accurate on Lyft so far, which granted, there's not a lot of history here. So I'm just sharing numbers with you. I'm not saying this is like these guys are magic or anything. Not a lot of history, but he's got a $75 price target. That's pretty impressive there. And 12 months. Yep, he's 71% accurate with a 25% average return. He's the best analyst on there. It's a guy from SunTrust. And I'll wrap it up with a couple names here. You got Apple, Disney, and Coke. They are all issuing bonds this week. A lot. They're taking on a ton of debt this week, and it's not even making the news. Apple has more cash than anybody, don't they? They still have more cash than anybody out there, and yet they're still issuing new debt to pay off old debt. You know how I've said you operate your personal finances like corporations operate their finances, right? Think of it in the same way. You got your top line, your bottom line. You're trying to grow your top line, you're trying to lower your bottom line, or raise your bottom line, right? So what Apple's doing here and all these other guys, they recognize that debt is so cheap right now that they're just taking on more debt to pay off the other debts. You know how much grief someone would get if they said to do that in your personal finances? The moral of the story here is, in your life, you take on debt when you can, not when you have to, right? Because when you have to, nobody wants to give you any debt. You're in a bind and you've decided you're going to do something crazy and take on some kind of debt. You're not going to get it, right? So Apple knows that. Coke knows that. They've been through this. Disney knows that. They're taking on debt when they can. And right now, it's a feeding frenzy. It's like $52 billion in debt total, $7 billion in debt for Apple that they're taking on because they can. It's advantageous to them. It's debt that makes sense for them to take on. I don't mean go get a credit card and you know what I'm talking about, right? But I mean, if you have the chance to take on debt to expand your life, right? To get the house that you want, that you can afford, right? To refresh the car or whatever it is, and you want to do that, go for it. Don't let anybody tell you you can't take on debt if it makes sense for you, and especially being as cheap as it is. See, in the past, we've actually, you would say debt's bad, don't take on debt, because interest rates were higher. But now it's so cheap to borrow money, then why wouldn't you consider borrowing money if you know you can pay for it, everything's fine there, you're not stretching yourself and everything. Look at these big companies and what they're doing. A lot of places are even taking on debt to buy back shares. I'm not sure I understand that, but they're taking on debt to buy back shares because they can, right? It makes more sense for them. Make it make sense for you. That's the bottom line. I'm not telling you generally what to do, but you get the idea there. So I just thought I'd share that because that's not even really in the headlines today. But this is typically a very busy week for companies to do that, by the way. At the first 2 weeks in September, if they're going to issue new debt, people go crazy with it. And so far, those are 3 of the bigger names that have done that. Yep. Love it. Makes sense. It's harder to get a mortgage in a downturn. Yeah, now you could get the mortgage and say, well, I'd still like to pay it off. I'm still going to pay aggressively. I don't like having debt, whatever. But if you can get 3%, mortgage rates today hit the lowest since 2016. Is that in the scroller? I think it's in the scroller down below. But mortgage rates hit their lowest since 2016. If it makes sense for you to go get debt, that's fine. The problem is you try to spend more, right? Because you see that because the interest rate's lower, you can technically afford a little bit more. Don't do that. Right? Be reasonable with yourself. Actually, we've done classes. I have all the classes loaded. Exactly how to buy a car, to finance it if you want to. Specifically, down to the numbers, how to do it so that you're never upside down. You can never actually go under in terms of not being able to pay for the car. You could sell it at any point, not be upside down, cover your insurance and everything. We go just line by line, and if you can justify the numbers, you go for it, right? Problem is, so many people are general about debt, and they either write it off or they're really excited about it. And you got to make it work for you, whether you're a cash person or a debt person. Those numbers got to add up. Get every advantage you can, because there are people out there that know those rules. They know what they can do, and they're getting the advantage. Maybe they have more money than you or less money, whatever it is, but they're getting the advantage. So you do whatever it takes to get the advantage in this life. But be reasonable. You know what I mean? I don't want to see y'all driving an Escalade, driving around town, pulling up to an apartment complex. Don't do that now. You know what I'm talking about. Somebody's going to give me grief on that one, but it's all right. I can take it. What normally happens after a buyout's been confirmed? Take a look at PVTL, the stock. I haven't looked at that one. PVTL, let's see. Let's see if we can figure that out for you. So, has the deal closed? It doesn't look like what's today? Well, deal hasn't closed yet, doesn't look like. It will stay right there. Basically, that's the end of it, and there is going to be some arrangement. Guess I'd have to look back. You'll just wake up one day and you'll end up, if it's one where is it VMware? There's some arrangement in there where you'll end up with so many shares of VMware, this will disappear, and your brokerage firm will take care of it for you if you own it, and that's the question you have. I was just trying to scroll back real quick and see if I could pull it up. I can't pull it up fast enough here. Summary. Well, look it up. You'll know exactly what it is. If you haven't been alerted already, they'll tell you, your brokerage firm will tell you exactly what it is, and that's it. Stock just stays there unless for some reason the deal doesn't go through, and it doesn't look like the deal is not going through. Looks like it's just going to be a done deal. Any dates in September to look out for? Major meetings or announcement? Yeah, the Federal Reserve is going to make their rate decision later in the month, and widely expected, at least as of now, they're going to cut rates by 1/4 of a point. I don't know why, but looks like that's what they're going to do. So that'd probably be the major one to look out for, and then it's just trade focus there. Going into tomorrow, we've got unemployment rate coming out. Yes, that's the right sheet. Unemployment rate coming out. You've got Fed President Powell speaking early in the day. It's not like a speech where he's just giving economic outlook speech, but everybody's going to be watching. You had crude oil inventories come out today. They come out a day later just because of the holiday from Monday. And all right, you think I covered it all. I did what I needed to do. Well, I'm going to get ready for our class tonight, and I thank you guys for watching, and just keep us in mind, right? That's all I ask. I do the show every day just to help you guys out, whether you're long-term or short-term. A lot of our customers are actually active in the short-term, but they let us manage the longer-term investments, retirement accounts, help with the advice. We help with everything. So if we manage your Roth IRA for you, and you have a 401k at work or something, I help with that too. I want to help your entire nest egg from your personal finances all the way into your investments. So keep us in mind. You can even schedule a call on the website if you like. Most of the time, I'm the guy that picks up the phone and calls you. So yeah, thanks for watching. Oh, hit the thumbs up button. That's 2 for 2. Thumbs up, subscribe, or whatever you do, and I appreciate it. We'll be back tonight for our customers. I'm looking forward to that one. We'll see you guys tomorrow to do this all over again. Have a great rest of your day.
Hey, to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.